You just landed your first freelance client, or maybe you're finally turning that side hustle into a real business. Congratulations! But now you're staring at a question that could literally cost you thousands of dollars if you get it wrong. What business structure should you choose? LC, S-Corp, C-Corp, C-Corp, Sole Proprietor. Everyone's throwing these terms around, and honestly, it's confusing as hell. But here's the thing, this decision isn't just about legal paperwork. It's about how much money stays in your pocket versus how much goes to taxes. It's about protecting your personal assets. It's about setting yourself up to build real wealth. Today, I'm breaking down every major business structure in plain English. No legal jargon, no confusing terminology. Just the real information you need to make the right choice for where you are right now and where you're trying to go. Let's start with the simplest option, the sole proprietorship. This is what you are by default if you start making money and don't set up any formal business structure. You're freelancing, you're doing some consulting work, you're selling stuff online, and you're just operating under your own name or a simple business name. Here's how it works. You and your business are legally the same entity. There's no separation. You report all your business income on your personal tax return using a Schedule C form. Super simple, super straightforward. And when you're just starting out and making a few $1,000s, this simplicity is actually beautiful. But there are two massive downsides you need to understand. First, liability. If your business gets sued, your personal assets are on the line. Your house, your car, your personal bank account, everything, there's no protection. Second, taxes. You're paying self-employment tax on every dollar of profit, which is about 15% right off the top, plus your regular income tax. We're talking about a combined tax rate that could easily hit 30 to 40% depending on your income level. So when does a sole proprietorship make sense? When you're just testing an idea, when you're making less than $10,000 or $20,000 a year from your side hustle, when you want zero paperwork and zero setup costs. But the moment your business starts generating serious income or has any liability risk, you need to level up. That brings us to the LC, the limited liability company. This is probably the most popular business structure for small business owners and entrepreneurs, and for good reason. An LC gives you that legal separation between you and your business. If the business gets sued, your personal assets are protected. That alone is huge. Here's what's interesting about an LC. It's incredibly flexible when it comes to taxes. By default, if you're a single member LC, the IRS treats you exactly like a sole proprietor for tax purposes. You're still reporting everything on your personal return with a Schedule C. You're still paying that self-employment tax on all your profits. The only difference is you've got that liability protection. But here's where it gets powerful. You can choose how you want your LC to be taxed. You could elect to be taxed as an S-Corp, which we'll get to in a minute. Or if you've got multiple members in your LC, it can be taxed as a partnership. The flexibility is incredible. Setting up an LC is relatively simple and cheap. You file articles of organization with your state, pay a filing fee that's usually between $50 and $500 depending on where you live, and boom, you're done. Well, not quite. You also need an operating agreement. You need to keep your business and personal finances completely separate, and you need to maintain good records. But compared to other structures, it's still pretty straightforward. So when does an LC make sense? When you're making real money from your business, let's say over $20,000 or $30,000 a year. When you have any liability exposure, like if you're working with clients, selling products, or doing anything where you could potentially get sued. When you want simplicity but also protection. For most people starting a serious business, an LC is the sweet spot. Now let's talk about the S-Corp, and this is where things get really interesting from a wealth-building perspective. First, let me clear up some confusion. An S-Corp isn't actually a business structure, it's a tax designation. You can be an LC that elects to be taxed as an S-Corp, or you can be a corporation that elects S-Corp status. Here's why people love S-Corps: tax savings. Big tax savings. Remember that self-employment tax we talked about? With an S-Corp, you can legally reduce how much of that you pay. Here's how it works. You pay yourself a reasonable salary for the work you do in the business. On that salary, you pay normal payroll taxes and self-employment taxes. But here's the magic. Any profit beyond your salary gets distributed to you as a distribution, and those distributions aren't subject to self-employment tax. You just pay regular income tax on them. Let me give you real numbers so you can see the difference. Let's say your business makes $100,000 in profit. As a sole proprietor or a standard LC, you're paying self-employment tax on the full $100,000. That's about $15,000 in self-employment tax alone. But as an S-Corp, you pay yourself a reasonable salary, let's say $60,000. You pay self-employment tax on that $60,000, which is about $9,000. The remaining $40,000 comes to you as a distribution with no self-employment tax. You just saved $6,000 in taxes every single year. Now, before you run out and elect S-Corp status, there are some downsides. First, there's more paperwork and more complexity. You have to run actual payroll, which means payroll taxes, payroll reports, and usually paying for a payroll service. You need to file a separate business tax return. You need to be way more careful about keeping everything documented and above board. Second, there are costs. You're looking at maybe $1,500 to $3,000 per year in additional accounting and payroll costs. So when does an S-Corp make sense? The general rule of thumb is when your business is making at least $50,000 to $70,000 in profit annually. Below that, the tax savings don't justify the extra costs and complexity. Above that, you're leaving serious money on the table if you're not at least considering it. Also, S-Corp status makes the most sense for service-based businesses and businesses where you're actively working in the business, not passive investments. Alright, now let's talk about the C-Corp, the traditional corporation. This is what people think of when they think big business. Apple is a C-Corp. Google is a C-Corp. But here's the thing, for most small business owners and entrepreneurs, a C-Corp doesn't make sense, and here's why. C-Corps face double taxation. The corporation pays corporate income tax on its profits. Then, when those profits are distributed to shareholders as dividends, the shareholders pay personal income tax on those dividends. You're literally paying tax twice on the same money. That's brutal for a small business owner. So why would anyone choose a C-Corp? A few reasons. If you're planning to raise serious venture capital funding, investors usually prefer C-Corps. If you're planning to go public someday, you'll need to be a C-Corp. If you want to offer stock options to employees, C-Corps make that easier. And if you're in a situation where you want to retain earnings in the company for growth rather than distributing them to owners, C-Corps can actually have some tax advantages. But for the average person watching this video who's building a business to create income and wealth for themselves, a C-Corp is almost never the right choice. The double taxation alone kills most of the benefits unless you're in very specific situations. So, let's bring this all together. How do you actually decide which structure is right for you? Here's my framework. If you're just starting out, testing an idea, making less than $10,000 or $20,000 a year, stay a sole proprietor. Keep it simple. Focus on making money, not paperwork. Once you're making real money or have any liability concerns, form an LLC, get that protection. Keep your personal and business finances completely separate. This is where most people should be. When you're consistently making $50,000 or more in profit and you're actively working in the business, start running the numbers on S-Corp election. Talk to a CPA. See if the tax savings justify the extra complexity and cost. For a lot of people, this is the wealth building sweet spot, and only consider a C-Corp if you're raising venture capital, planning to go public, or have very specific strategic reasons that your attorney and CPA both agree make sense. Here's what most people get wrong about this decision. They either wait too long to level up their structure and leave money on the table, or they overcomplicate things too early and waste time on paperwork instead of building their business. The structure should match where you actually are, not where you hope to be someday. One more critical point. Whatever structure you choose, you have to actually maintain it properly. I've seen people set up an LLC and then completely mix their personal and business money, which can destroy that liability protection. I've seen people elect S-Corp status and then not run proper payroll, which gets them in trouble with the IRS. The structure is only as good as how well you maintain it. And here's my final piece of advice. Get professional help for this decision. Yes, you can learn the basics from videos like this, but when it comes to actually choosing and setting up your structure, spend a few $100s to talk to a CPA and a business attorney. They'll help you make the right choice for your specific situation and make sure everything's set up correctly. That investment will pay for itself many times over in tax savings and peace of mind. Building wealth through business isn't just about making money. It's about keeping as much of that money as legally possible and protecting what you've built. Your business structure is a foundational piece of that puzzle. Get it right and you're setting yourself up for serious wealth accumulation. Get it wrong and you're either paying too much in taxes or putting everything you own at risk. So take this seriously. Look at where your business actually is right now. Run the numbers. Talk to professionals. Make the right choice, and then focus on what really matters. Building a business that generates real wealth and real freedom. If this breakdown helped you understand business structures better, subscribe to the channel. We're putting out content every single day to help you build momentum with your money and your business. What structure are you using, and what questions do you still have? Drop them in the comments. Now go handle your business literally.